Hello, community. Welcome to today's community event. We are delighted having you all here with us today. I hope you and yours are doing fantastic. Glad to have you all here with us today. Um, Thank you for taking your time and being part of this session today. We are always looking forward to these sessions as there's so much to discuss. There's so much to go over as today's topic is giving it away. It talks about embrace and thrive on change. Before we get to that, I'd like to encourage us to engage with the tweets as our daily routine. We have them all out. Survivor, Killer Whale, and Bullrun, they're already out there. So let's engage with them as they give us the opportunity to reach as many individuals or crypto enthusiasts as possible. And we can also bring awareness on the crypto industry, what it's all about, and also discuss the various opportunities and challenges that find themselves within the industry. We can discuss the approach that we're taking to have solutions to these challenges, and we can zoom in and then build parallels with our ecosystem. So those that are new, welcome to today's community event. And those that are regular, we're also delighted having you here with us today. Also, we'll go through your comments at the end as always. And so stay tuned. We'll want to go through the session fast so that we can really dissect today's topic, as there is a lot to cover today. So once more, welcome everyone. We are delighted having you all here today. And we have these weekly events, four of them actually. We have them today on YouTube. We have them on Saturday on Telegram, and then Monday on Twitter Space. And then we have Sundays as well on Zoom. That's exclusively for the queens within the community. So if you're a queen, you want to be part of it, feel free. Join our social platforms and be part of this movement. With that said, community, let's get to today's session, as there's quite a bit to cover. Embrace and thrive on change. That's a solid topic, and there's so much to discuss and dissect about that, because let's keep in mind always that this cryptocurrency it's not about tokens and coins. It's literally about the technology, and we often tend to forget that, right? We need to understand that after all, the blockchain technology is like the name is giving it away. It is a technology, and if you don't embrace that technology, you won't be able to thrive, right, with it. So let's embrace it so that we can thrive with the changes, right? Especially this early on, there's so many dynamics that are happening, and we're about to go through every single one of them. So bear with me as I'm sharing my screen so that we can hit the session full speed. I always like to kickstart just briefly, go over the market's conditions. The usual suspects, Bitcoin is above 100,000 again. Ethereum is hovering right below 4,000. As we see, Bitcoin dominance is roughly at 55%, Ethereum at 13%. Fear and greed index is still at extreme greed, and that usually correlates positively with the market. If we are in extreme greed, usually the markets are also green accordingly. That's how it works. The market is very emotional, sentiment driven. And this is why it's very important to really be on top of the news, understand what's going on around the world globally on a macroeconomy level, or it's very important for us to understand all of this. So with that said, let's really get right to today's session. Let's hit at some news first. On this day today, this is something that is really to just kickstart. This day today, 14 years ago, exactly 14 years ago, Satoshi Nakamoto, famously known as the synonymous name of the founder of Bitcoin, he made his final post on the Bitcoin forum, right? And then the next day, he logged off, and we never heard from him again ever since. Why is this so relevant? It's one of the biggest strengths of Bitcoin is its network effect. Its community took over literally and is literally running Bitcoin, right? Everybody's chipping in and just putting their efforts in just discussing about Bitcoin, bringing awareness to Bitcoin on a global scale. Even though today, exactly 14 years ago, the founder left, logged off, and was never returned again. So uh, this is one of the items that makes Bitcoin so unique, so special. Its network effect, its community has a large, solid, committed, dedicated community, and it's really maximizing the network effect of this blockchain technology. So this is just a side note that I just wanted to share, as it's today exactly marks 14 years that the founder apparently of Bitcoin logged out forever and was never seen again or never heard from again. So let's keep that in mind. Another thing also that is relevant, and this is the CPI report came in and it meets estimates. So the market speculated that it is literally going to be that. It came down to roughly 2.7%, like expected. So this, of course, is setting the stage that the Fed rate cut is going to come next week, December 18th. So just under a week from today. So actually, it's next Wednesday. We're supposed to see another potential Fed rate cut. So this is another thing, of course, that affects not just the crypto industry, but it affects the whole the global industry, all industries as a whole, right? So this is also important for us to know or to keep in mind what we are about to expect next week, as it will also play a major role in affecting the market and us also directly, of course. So one thing, and this was like at the beginning of the week, the U.S. Treasury itself now, Jerome Powell, right, was clearly stating that Bitcoin is literally like digital gold. It's literally like gold. It's the digital form of gold, right? So, of course, we know how digital assets have been picking up lately, especially on social media. Since the beginning of the year, in January, we saw how we've never expected this to happen. It started with Bitcoin ETFs, and 11 months, 12 months later, they're the most successful ETFs in the history of ETFs. We've seen so much growth since then. This is why we also started with 14 years ago, right? When the founder was here. Since then, a lot of things changed. And one of them that is really being pushed is Bitcoin has been really pushed since the beginning of the year in forms of ETFs, in forms of futures contracts, spot. Besides the spot ETFs, of course, also the options trading as well. And it really has integrated so many institutions, countries. It got into politics even. So it's just been global crypto, Bitcoin reserve, treasury reserve is the topic of the day. Everybody's talking about it, and everybody involved in politics is using that to be reelected. So it's been just a year. 2024 has started and is literally ending on a high note on Bitcoin, right? And it reached in the ears and mouth of the Treasury itself, the US Treasury, and they're looking Bitcoin as gold, right? So primarily use case for Bitcoin seems to be a store of value, right? Or digital gold. And this is what Bitcoin is really known for. And let's keep this in mind. And store of value, it's digital gold. And this is what we need to understand. So as we know, digital assets have really witnessed a rapid growth, as we see here. And in gray, you see stable coins. I'm not sure if you can see it well. Let me maybe this is better. So in gray, you see stable coins. They've experienced even more growth, right? Of course, Bitcoin and Ethereum have been really experiencing rapid growth. However, stable coins, as we see in gray, have even achieved way much more success, right? So as we see, this is something that we can't just leave out like this. We always like when we read articles such as this and we make statements such as this, we always like to verify them, right? Let's not always take everything at its face value. So before for us to kickstart to verify all of this adaptation of crypto, most specifically, like we see on this chart, stable coins, Bitcoin, store of value, it's digital gold. Let's understand all of this, right? Where are we today? So to kickstart this, we need to go to this article right here. So this article is this, right? It's a very famous article and it's really aged very well. It's from November 2023. So it's slightly over a year ago. Cryptocurrencies have failed the test of digital money, right? This article has so much significance and it really aged extremely well. But keep in mind, what we're doing here is we're verifying this statement right here, right? And so let's just look at what it says. If we're reading here, it says that stablecoins, not crypto, will be part of the financial ecosystem in the future, right? And this comes not from some random Twitter shiller, but this is the managing director of Singapore Central Bank, and also a former director, or still a director, at the World Economic Forum. So there's an individual that is well respected, well rounded, highly informed, highly experienced, and they're saying, or rather they said over a year ago, that stablecoins, not cryptocurrencies, will be part of the financial ecosystem and in the future, right? So let's keep that in mind. Another thing that is very interesting here also is that we need to understand one thing. Like we said, cryptocurrencies have failed the test of digital money because why? They have performed poorly as what? As a medium of exchange and a store of value. Hang on a second. What did we see here, right? Didn't we say digital Bitcoin is supposed to be the store of value, right? It's digital gold. Well, this article says it performed horribly as a medium of exchange and a store of value. And it's furthermore saying why. Why is that the case? Their prices are subject to sharp speculative swings, and many investors in the cryptocurrency have suffered significant losses. Quick recap. Bitcoin is a store of value. It's digital gold. And it's experienced since the beginning of the year a lot of growth and a lot of attention. Really has been demanding, or commanding rather, the stage since January 2024 till today. We read here that the Monetary Authority of Singapore is clearly saying that stablecoins, not cryptocurrencies, are going to play a major role in the financial ecosystem, future of financial ecosystem. And because they failed to perform, they performed poorly as a medium of exchange and a store of value, and that their prices is subject to sharp speculation. This basically means it's volatile, right? And why are things volatile? Usually things become volatile due to, if you don't have enough liquidity, there's volatility. Also, let's be fair, it's a young industry. What do we expect, right? But however, many investors in cryptocurrencies have suffered significant losses. Like we said, we always like to verify statements. We don't like to just take things for what they are. So what are we going to verify? Prices are subject to speculative swings, meaning volatility, and investors losing a lot, suffered significant losses. Let's cross-reference, let's double check these two statements, right? Best way to do that is with this article right here. This just happens this week, just 2 days ago. So crypto market crash triggers 1.5 billion in liquidations as Bitcoin drops below 95,000. So liquidations, what does liquidations mean? And why did it crash? It's obviously due to the volatility. So we're just verifying what this says. So sharp price fluctuations and many investors are losing significantly. This article, just the headline alone, verifies that statement, right? Volatility, a lot of liquidations, meaning losses. How big is the loss? 1.5 billion. And this is just within 24 hours, just one day, right? So the article has been literally, just with the headline alone, it has verified uh, the statement of the Monetary Authority of Singapore and individuals saying that. But let's not just stick to that. So the cryptocurrency market has seen a sharp decline. Same thing that we read here. It has literally almost the same word, sharp, speculative swings, almost word for word, right? Sharp decline over the last 24 hours, with Bitcoin falling to 94,000, and the drop contributed to 1.5 billion in liquidations. Now, affecting what? Approximately over 500,000 traders. Let's put a point here and let's go back. So what do we know now? There was a sharp decline, volatility, and it affected approximately over 500,000 traders. Let's go back here. What did it say? They have performed poorly as a medium exchange and a store of value, and also their prices experienced a sharp decline. Okay, what else? The investors have suffered significant losses. This just verified it, and this just happened this week, 2 days ago, and it happens every single day. This is what's happening. 500,000 traders, this is a lot of people, are speculating out there, and due to sharp swings, right, due to a sharp decline in prices, either way, we've experienced a lot of liquidations that took place. Now, what's the takeaway here? Let's keep in mind liquidations. What is liquidation? We'll get to that, right? And of course, Bitcoin is always the number one most liquidated. People use Bitcoin as collateral, right? And Ethereum as well. They're always the top two used as collateral. So let's continue before we get to the takeaway. The latest wave of liquidations follows a 1.1 billion leverage wipeout. This was 1 week ago, exactly a week ago. There was a 1.1 billion in leverage wipeout. This marks the largest liquidation event since last bull cycle. Literally, the last bull cycle was the last time there was such a large liquidation. It was during the last bull cycle. This was 1 week ago. And then today, a week later, it was even more. It's 1.5, right? So let's go even here now. Let's see this. So Monday, beginning of the week, developments come during turbulent period of cryptocurrency. So the rapid fluctuations in price. Remember, price subject to sharp speculative swings, right? Keep this in mind. We keep verifying it. Large scale of liquidations highlighted ongoing risks associated with trading highly leveraged positions, right? So now that we understand and we verified two things, volatility, and we also identified that besides the volatility, we also saw that the liquidations are high. Sharp volatility, traders, 500,000 traders lost, and then also the liquidations, right? Why is that so significant? The best way to go about this is always find solutions. First of all, find challenges. What are the challenges right now in the crypto industry? Obviously, this is a pandemic. This is a large amount just in 24 hours, 1.5 billion. This is a large amount. So look at this. The crash wiped out 1.7 billion in leverage positions across markets, reflecting the intense sell-off, right? So let's move even further. Let's look at this even in more detail. So according to detailed analysis by the algorithmic trader, the events leading to that sudden crash unfolded in stages. Now let's understand from another article. Let's verify the other article. What was the cause, right? So market structure weakness. What does that stand for? What does market structure weakness stand for? We'll be able to answer that if we look at these two. High leverage. This is borrowing. And what else? Liquidity issues. Why do we always end up coming back to liquidity? Because we identified that in this industry, there are four major challenges that we face. And one of them happens to be this right here, liquidity challenges. Why this? How does this liquidity relate to all of this that we've been discussing so far? It's because without liquidity, you have exactly this, right? You have volatility, high volatility, sharp swings, and also due to volatility, it causes a lot of leverage liquidations, right? And that happens, and that causes a lot of traders to get wiped out completely. So this is something we need to understand. Now, where are we heading with this? Why are we discussing this? Is because we need to understand the challenges right now are leverage. People love to leverage. Leverage basically means you're taking on debt. You're borrowing money to invest in the crypto industry. And you borrow money against collateral. Collateral is like we see here. It's all most of the time collateral is Bitcoin and Ethereum, right? It's always Bitcoin liquidations, right? And Ethereum. So those are the two collateral right now that are being used the most. So now, another thing that we need to understand is, so the sell-off began aggressively on Coinbase, where traders started offloading assets, right? Nearly an hour before the major crash. So it sets the stage. This persistent selling pressure gradually pushed Bitcoin's price into a certain zone, setting the stage for what's known as liquidation cascade. So what does that mean? When prices dip below a certain threshold, over-leveraged positions. What are over-leveraged positions? Those funded by borrowed capital. Remember what we discussed. Leverage means two things. First of all, it's borrowed money, and you used collateral to borrow that money. So it's your asset, and usually it's Bitcoin and Ethereum. And because they're fluctuating too much, right? The price fluctuation like we see because lack of liquidity. We saw here the reason why, right? We need to really stay with this, understand this. It's because of the lack of liquidity like we saw. And that's the reason why, right? Like we saw here. It's because liquidity issues, right? Liquidity issues and leverage. Your collateral is not strong enough. It's too volatile. You have a volatile collateral and liquidity challenges. So keep that in mind. Now, one more thing that I want us to look here is this. So to put this into perspective, according to this data company, over 1.6 billion in futures contracts were liquidated. Remember futures contracts, and this is just within 24 hours. So, and out of this 1.5 almost billion were long positions. Long positions are traders betting on the price to increase, while only 174 million were shorts. So why was so many people, 1.5 billion, were betting for the price to go up? What occasion was that? Why were people betting so much and borrowing using a collateral that is literally volatile and illiquid to borrow against it and betting for the prices to go up, to increase? Before we answer this question, one thing that is very important. First step, always identify the challenges in the space. So far, we've been discussing this. What are the challenges? Lack of liquidity, volatility, this which causes lack of liquidity is the number one. And the symptoms of lack of liquidity is a sharp price volatility, and also it that causes, of course, liquidation. So, in a nutshell, liquidations means two things. You have a volatile asset collateral that you're borrowing against, and the ideal collateral is not supposed to be volatile, and you can address that as by with major things. To address and have a solid collateral, it's supposed to be, first of all, liquid so that it's not as volatile. It's supposed to be deflationary, at least, if not scarce. And it's supposed to have an incentive so that those who are actually bringing the stability into the ecosystem, you need to incentivize them. And the fourth one is, of course, you need to make it efficient and sustainable. And how are you doing that? Using the trading volume for that, right? Keep this in mind. We always discuss this. So out of this, 1.5 billion were long positions. Now, why were so many people betting on the price to go up? If you remember, it was because Michael Saylor's case for Microsoft, right? Buying Bitcoin, and it got rejected. This, of course, also caused a major shift, right? So, but what we want to focus on here now is one thing. Why was Michael Saylor so eager to talk to Microsoft? Because in a nutshell, he wanted them to convert their cash flow, their dividends, the funds they use for buybacks, and even debt, and to convert them into Bitcoin. Now, keep in mind, if you understand Microsoft and other major tech companies such as Apple, Google, Amazon, they are heavily into this right here, cash flows. First of all, they like to invest in infrastructures, in technologies. And these infrastructures and technology that they're investing in, they're supposed to be having a cash flow. This is why you see, let's go one by one. Apple, they have like this cloud service subscription. They usually give you like 1 gig, and then you have to like subscribe and get more cloud storage. They're into subscription, right? Besides the obvious products that they put out, but they love subscription because that gives them a steady cash flow. So tech companies love cash flows. Another thing also, if you're an Apple investor, of course, the dividends, right? And Apple is notoriously does buybacks a lot, right? So, and another thing, if you look at Amazon, they obviously into cloud computing, and that's a subscription-based service as well. So is Google and Microsoft as well. So they love to have cash flows. They love to invest in, first of all, technologies, in infrastructures that has cash flow. And we just looked at some of them. They have to have subscription, some sort of a cash flow they're supposed to have. So this is probably one of the reasons why they also said, well, Bitcoin is obviously a store of value, right? It's digital gold, like stated right here by the US Treasury. And it's a store of value. It's digital gold. So all you can do, you buy it, you hold it, you never sell it. That's it. It doesn't give you any cash flow. It doesn't have that, right? And this is what tech companies are so wild about. They're so eager for that. They look forward to that. That's what they want. That's what they need. And this is why Ethereum was for them is such more an attractive asset due to their staking. So like we discussed, with this favorable regulation, once it kicks in and it comes into play, and the Ethereum ETFs are allowed to be, giving out staking rewards, right? This is a much more attractive investment. And it also will serve as a much more secure Ethereum collateral, right? So let's keep all these things in mind, community. Let's keep all of this in mind as we progress. So if we move on here, we see that the president-elect Trump says that anyone investing over 1 billion US dollars in the US will receive expedited approvals and permits. So if you're an opportunist, you will jump on such things, right? And like we always say, we don't just want to take things for their face value. So let's verify this. Let's see what happened in the market. So if we look at the market, one thing that happened immediately, and this was just today, right, December 12th. Like I say, I don't believe in coincidences. So Circle and Binance, they teamed up to boost crypto adoption. What a coincidence. So the president already gave green light. If you invest $1 billion, your licenses, your permits, you'll get them. It will be accelerated, right? You'll get it ASAP. So Circle and Binance are teaming up. Why is this so significant? Circle is the company behind USDC stablecoin, for one. And Binance is the world's largest crypto exchange. Formerly, Binance had previously delisted USDC because they were running with USDT, right? But now Circle and Binance are partnering. The largest regulated stablecoin USDC and the world's largest crypto exchange are joining forces. This is major. This is major news. This is a great partnership. This was announced during the Abu Dhabi Finance Week by the Binance CEO himself and the Circle CEO as well. Why were they doing this? Because the aim that is to make crypto and USDC more accessible to, obviously, to many people. So Binance plans, they want USDC everywhere. So their plan is to roll out USDC across all its services. This is big. So now you have the largest exchange in the world embracing USDC stablecoin. Why, you might ask yourselves? Why? Why now? Why now? Keep in mind, there's always reasons. When you read articles like this, always verify, fact check them. So now obviously we see a major reason also why is if you want accelerated permits, if you want to be, expedite your approvals and permits, $1 billion is a drop in the ocean for Binance, right? So obviously this is the best move to go about it. They're partnering with the well-established, the largest exchange in the US. They are teaming up with the largest regulated stablecoin, and this is how they can get their permits and all that approved, right? So USDC will be everywhere on Binance, making life a whole lot simpler for the users. Binance is also adopting USDC as its core, as a core part of its corporate treasury. Now, this is major. As of today, it's always been Tether. But now they are adopting USDC as its core part of not just for trades, but for its treasury, corporate treasury as well. So this means Binance trusts USDC to store and move money securely. So if we go back here, we come full circle. We're coming full circle. Stable coins, not crypto, will be part of the financial ecosystem in the future. It's aging very, very well, right? So as part of this partnership, Circle will provide Binance with technology, liquidity. Why is that so important? Because it needs it. Liquidity, without liquidity, nothing runs. And the tools to improve how users interact with USDC. So together, the two companies aim to create new products and partnerships that make the stablecoin and crypto easier to use in everyday life. So this is a major step. This is a major step. What is their shared vision? What is their vision? Both companies bring their strengths to the table. Binance, often called a financial super app, offers everything from trading to payments. Circle, known for its trusted and compliant USDC, brings innovation and reliability, right? So, of course, we have admiration for Binance and all of that. They always focus on quality and user experience. and he's excited to partner with Binance to grow towards serving over a billion worldwide, so on and so forth, right? So looking ahead, what's the future? This partnership could change the game of stablecoins and crypto as Binance expands its compliance and risk management efforts. Remember, Binance just got booked by the Department of Justice, and they're under, for the next 5 years, there'll be DOJ, Department of Justice, going to look at their hands, look at their balance sheet, and watch every move they make. So Binance is literally working hard for their reputation. They're working hard to be compliant and their risk management efforts. So the collaboration with Circle marks a big step towards all of this, right? To bring back that trust. Why is that the case? Because keep in mind, BlackRock is backing Coinbase. BlackRock is backing Circle and is heavily invested in Circle. And Coinbase is in partnership with Circle. They're co-owners of USDC. So you see what's happening here. So Circle and Binance are working together to bring stablecoins into mainstream, right? And so on and so forth. Okay. So now let's move further. Why is this a significant, community? And let's start from the bottom. The significance of this is that stablecoins market cap right now are only at 200 billion as of now, just 200 billion. This is a major milestone. It's never achieved this milestone. During the last bull cycle, it achieved 190 billion. So it surpassed last bull cycle's market cap before even going through a full-blown bull run this cycle. So by next year, it could even double, as adaptation accelerates, such as with these partnerships like we saw, right? So this is something that is very, very favorable for us as an industry. And this is really will bring a lot of awareness, not just to the USDC, obviously, but to the crypto industry as a whole, as regulations are really honing in, and stablecoins could double market the size next year with the US Congress passing legislations, right? Being a key catalyst. And this is exactly what we always talk about. Everything is lined up. All we need is the passing of their legislations, right? The regulators passing clarity, bringing clarity. Everything else is lined up already, like we see here. And let's continue. We're building a story here. So, like we said, tech companies such as Google, Microsoft, Apple, and Amazon, they're very cash heavy. They have a lot, they prefer investing in cash flows, right? In investments, infrastructure, and subscription-based infrastructure that people subscribe to. Like Microsoft, we still have to subscribe to the software, Microsoft Office. They love to invest in things like that. How much are they willing to spend? $1 trillion. Just these four alone invested $1 trillion in AI in these coming years. So cash is not an issue, and they love to be at the forefront of everything. Google, Microsoft, Apple, and Amazon, they're always at the forefront of technology, and they are not shy to invest $1 trillion into a technology they believe in. However, if we look at this, the upcoming years, they want to invest in AI. Why is that so relevant? Because didn't we just read in our last community event that Amazon is investing, and actually it's even in this article as well. Amazon is aiming to invest. Okay, let's start with Google. Google invested just $3 billion to expand or to build and expand their data centers. And they have spent $60 billion to train AI. So that's a lot of. There are companies that don't even have that market cap, let alone cash to throw around like that. Another thing is, if we look at Facebook, Meta, they hit 50 billion to spend that they've spent in AI. Look at Apple, 100 billion over the last 5 years, just on research and development, 100 billion. So money is not a big deal for them. Microsoft has plans to obtain almost 2 million AI chips from NVIDIA alone. So they're spending even more. Amazon, this is the cash heaviest amongst all of them. They have the most cash at hand. They are actually spend around 150 billion on their data centers alone in the next 15 years. Why would they put so much emphasis on their data center, like we discussed in our last community event? Is because they understand that once you invest in infrastructures, and like we said, Amazon, they have the domain name, right? Ethereum, amazonethereum.org. So they investing, there's not public information yet. It's not official that they are, that they're really doing that. But if you connect the dots, you see obviously they have the domain name, and one of the third largest, Microsoft, they rejected to go with Bitcoin because they're also Microsoft is actually the third largest cloud computing service provider, and they rejected Bitcoin. So they all are focusing on revolutionizing this technology and having a subscription-based product that they can have, and that comes in the form of investing in infrastructure specifically for the blockchain technology. And what is the largest blockchain with smart contracts? It's Ethereum. So imagine if they're willing to drop so much money, 150 billion they just dropped in the last for the next 15 years. They want to invest in data centers, in infrastructure. They already secured the domain. So you can imagine, definitely Ethereum is also obviously part of this 150 billion in the upcoming 15 years, with 80 to spend in AWS. Remember, Amazon Web Services. So this is extremely interesting to see that these four have they're cash heavy, and they have the money to back and support infrastructures of new technologies. Where are we heading with this? And why is Amazon willing to spend so much money in the next 15 years on their data centers, upgrading them, all of that? Why do they secure a domain name starting saying Amazon Ethereum.org? Why they're focusing on Ethereum so much? Is my humble opinion is that they're going to be the backbone of Ethereum infrastructure. The answer is this. It's because BlackRock is eyeing crypto derivatives market with BIDL as collateral. These institutions are here to solve challenges. They're not here to put out meme coins. They're here to solve real world challenges. When we started this session, we identified the challenges, right? We identified the challenges. What were the challenges? This is the challenge right now. There's 1.5 billion in liquidations. This is not in 1 year. This is not in the last 5 years. This is in 1 day, 24 hours. So liquidations are the challenges we face right now in this industry. And like the authorities said, this is what their worries are, right? They're worrying that the prices are too sharp swings, and that many investors are just suffered significant losses due to these three things that were discussed here. And this is important for us to really understand and embrace. It's a mix of leverage, right? Too much leverage position. And also this affects, this causes liquidations. If you have too much leverage, you're taking on loans, too much loans on it, this causes it. And these are the three things, right? So now it's a mix. You need to understand that. Now that we understand that, community, it's clear for us to understand why the partnership happened with Circle and Binance. It's because they want to work on something, that the challenge that we are experiencing right now. And what challenge is that? Collateral. There is no collateral. Remember how a collateral should be. A collateral should be first and foremost liquid. It should be deflationary, if not scarce. It should have incentives in form of USDC, stable coins. and it's supposed to use its volume efficiently. Those are the four challenges. Lack of liquidity, inflation, unsustainable staking distributions, and inefficient use of volume, right? Don't take my word for it. Don't take my word for it. Let's look at it here. So BlackRock they want to use BUIDL as collateral for derivatives market. Why are they doing this? Why do they want to do this? Because they identified the challenge in the industry is too much liquidations are happening. Weak collaterals. The collaterals are weak and the volatility is way too much. And if you want to capture the derivatives market and the US Treasuries market, which is the bond market, you need to have a solid collateral. And that collateral is in the form of BUIDL. This is why they came up with the liquidity fund BUIDL. And why did Binance put themselves together with Circle? And why is Binance using USDC stablecoin? Because BlackRock, BUIDL's BlackRock is paired with USDC. So this BUIDL token that is being used as collateral in the derivatives market is paired with USDC, and they're on Ethereum, like we've been discussing. It's a token on Ethereum developed by Securitas and BlackRock, and it's called BUIDL, and it's supposed to be used in the derivatives market as collateral. Because right now, the challenge we are facing, we've been discussing this for the last 40 minutes now, is we need a collateral that is liquid, that is not inflationary, that has incentives, and that is using its volume efficiently. So let's verify this. Is this really the fact, right? So let's look at this. So the move could boost the significantly nearly more than 500,000 market cap of BUIDL, right? And what is BUIDL? It is the largest tokenized treasury fund. So let's look at two things here. Let's first look at what is the derivatives market? How big is it? How significant is it? It's big enough for Binance to want to partner with Circle because of the US and adopt USDC on the blockchain. Binance is very known for derivatives trading. Keep that in mind. So now, if we go down here, let's understand what's the derivatives market. How big is it? How big is the derivatives market, right? How big is it? And we've been discussing this. It's gigantic. It's over $1 quadrillion. So this is interesting for BlackRock. This is interesting for Binance, and this is interesting for USDC. There's money to be made in a $1 quadrillion market. So this is very interesting. What about the treasury market, the bond market? If you look at the global bond market, you're looking at 119 trillion worldwide. 119 trillion market. In the US alone, it's 46, right? 46 trillion market. And like we saw here, BUIDL is the largest already. It's already the largest tokenized treasury fund. So what does that mean? When BlackRock comes into play, they usually they don't come to participate, they come to take over. And now that they identified that there's a major issue, we need collateral. And this collateral is supposed to be liquid, deflationary, if not scarce, gives you incentives in USDC, and uses its volume efficiently. Okay. Now, BlackRock is reportedly in discussion with several centralized exchanges, right, to allow BUIDL fund to be used as collateral for derivatives trades. And Binance is one of them, OKX, and so on and so forth, right? So this move is part of a broader push by Wall Street firms to deepen their involvement in the digital asset market. So the BUIDL token requires a minimum of 5 million and is specifically designed for qualified institutional investors. So it's not for retailers. It's not for you and myself. It's first of all for qualified institutions. Let's keep that in mind. Now, one thing that is very interesting here is that direct acceptance of BUIDL on platform like Binance would increase the market reach, obviously. And just to emphasize on how large the derivatives market really is, Just in September alone, the derivatives market moved $3.5 trillion just in 1 month. And this is almost 4 times larger than the spot market. What is the spot market? The spot market is the spot ETFs like you see right now. They are the most successful ETFs in the history of ETFs. That's the spot market. The spot market. Bitcoin spot market has catapulted Bitcoin ETF to be the most successful ETF in history. However, it's a drop in the ocean because in 1 month alone, the derivatives market, which is way larger than the spot market, 4 times larger than the entire spot market, just in 1 month. 1 month of derivatives market is bigger, 4 times bigger than the spot market combined. So that's just to give us a perspective of how large the derivatives market is. So what else? DeFi, right? DeFi and traditional finance entangled. So the report also, the world's largest asset manager is moving deeper into crypto, like we said, like none other. And they want to really get into offer decentralized finance for institutions, actually. So Tether, which is the USDT stablecoin issuer, they also considered offering lending for the commodities trading companies. They want to offering lending, and they're also into DeFi, right? And BUIDL is already into DeFi, and they're considering DeFi through their tokenized shares, right? Instruments. They already went ahead and partnered with, also working together with Aave, and Aave can now, BUIDL now can be used as collateral for DeFi, decentralized finance, because a lot of liquidations happen with Bitcoin and Ethereum as we speak. So BUIDL has so many utilities, so many use cases. And like we said here, even the Aave's Gold token, which is a stablecoin, you can swap it and it will give you, they'll give you USDC for it as well. Why are we mentioning all of this? Is because these are the use cases for BUIDL. So Athena, they're coming out with their new stablecoin, which is backed by BUIDL, right? Why is this so important? Why is this so relevant? It's because of this. Like we said, it's being integrated to fund, it's going to be integrated as collateral for Binance. This is official now. We just read the latest article. This is now official news, community. And like we've been discussing in many community events, we've been discussing how BUIDL plays a major role. And it's, you look at the markets that are going to be present in. These are the derivatives market alone, and this is where they want to. They want to use BUIDL as collateral for the derivatives market and in DeFi. And the largest derivatives market issuer is Binance. So, and don't take my word for it right here. This is what we see here. So this could shake up the current dominance of USDT, which currently holds a market value of 120 billion and is the most commonly used collateral in crypto derivatives. So community, this is not just something that we are talking that will happen in 5 years. It's happening right now as we speak. So USDC is getting ready to dethrone, USDC is being adopted on Binance and is getting ready to dethrone USDT. So by having it accepted as collateral, BlackRock aims to provide a highly liquid and secure alternative for derivatives traders, because as we speak right now, there is a major issue in the industry, and this issue is liquidations. There's just too much liquidations going on, and to solve this liquidation challenge, BlackRock came with BUIDL. BUIDL is paired with USDC, and BUIDL pays you on a monthly basis and it pays due dividend in USDC, stablecoins. So why is this so important? The token, is a BlackRock-based representation of a traditional money market fund that invests in assets like US Treasury bills, the bond market. We saw how large the bond market is, 46 trillion, and it's already the largest bond market. So even if it's just 10% of the 46 trillion, that's still close to 5 trillion in liquidity that is coming on Ethereum. And if that also means, because it's paired with USDC, this means that USDC will also have to have purchased the same amount, $5 trillion worth of US debt. Now, what is that effect? What an effect will that have? Keep in mind, the largest country that holds US debt right now is Japan, with roughly a little over 1 trillion. And then China, 700, roughly right under 800 billion. And then UK with 700, and so on and so forth. So even as we speak right now, with at the beginning of all of this, stablecoins only have a 200 billion market cap, but it's still ahead of Norway, Saudi Arabia, South Korea, Mexico, and Germany. And with the ambition that BlackRock has, and they're saying it here, they want to get into the crypto derivatives market, which is 1 quadrillion big, and they're using their BIDL token as collateral. This is a fact. And also, the reason why they partnered with Binance is because right now, USDT is the one that is currently used the most in the derivatives market, right? Now, look at what BIDL is saying. BIDL distinguishes itself from other stablecoins by offering interest to holders, and that interest is in USDC, making it an attractive option for institutional investors seeking both yield and security, right? So in exchanges like Binance, BIDL token could become the standard for institutional collateral, providing regulated, yield-bearing alternative to existing stablecoins. Remember what we were discussing earlier. It has to be liquid. It has to be deflationary at least, if not scarce. It has to have incentives, right? And it needs to use its volume efficiently. So in addition to its focus on BIDL, BlackRock has been actively leading the Bitcoin ETF like we discussed. So what are we discussing here, community? What are we saying with all of this? Coinbase actually, starting tomorrow, is going to delist USDT stablecoin in Europe. Why? Because they didn't achieve MiCA compliance. And it's not just USDT. It's not just USDT. So cryptocurrency exchange in Europe are preparing to delist locally non-compliant stablecoins as European crypto regulations near an enforcement deadline. That deadline is tomorrow. So Coinbase Europe, Coinbase Germany, and Coinbase Custody International, they're going to delist USDT and 5 other stablecoins tomorrow, December 13th, right? And based on the latest information, it's not just going to be USDT, but they're also going to do, besides USDT, PAX, PayPal USD, Gemini USD, and even DAI, which is mostly used in DeFi. And this is the reason why they're going to do this, is because they don't meet the MiCA regulations, right? They don't meet the requirements. However, USDC does. They've been having the license since July 1st. They're the only regulated stablecoin that has the MiCA license. So Coinbase is going to delist, and coincidentally, I'm being sarcastic here, at the same time tomorrow USDT is being delisted. Today Circle is partnering with Binance, and Binance, USDC is literally taking over the market share for Tether, and Tether right now has been mostly used for the derivatives trading, and now USDC is going to take over, right? And this is exactly what's happening here. So this liquidity fund is for the derivatives market, and this liquidity fund is purchasing US Treasury bills. So then the bond market. The bond market is at 46 trillion. And the aim is to be collateral for the derivatives market as well. So that means they're also into a $1 quadrillion market. Both of them are backed by US Treasury bills, meaning they'll be purchasing US debt, meaning that now eventually with all these trillions of dollars in market, this $46 trillion market in a bond market and a $1 quadrillion market in derivatives market, this will actually place easily place USDC and the BIDL token way above nations as far as holders of US Treasury securities, right? So this is now with all these brisk and all of this going on in the world, de-dollarization and all of that, the US now has institutions that are highly regulated that will be holding more US debts than entire countries, entire nations. So now the US will have institutions, large financial institutions, regulated ones that are using already, are in the crypto industry, that are purchasing US debt more than nations. This has never happened in the history of finance before. And the debt issuers are stablecoin issuers, is BlackRock, is the likes of JP Morgan and all of them, Coinbase. So these are all four major institutions, US institutions, that will be purchasing US debt. And it will be used in DeFi, it will be used to do derivatives trades and all of that. And this just means that Tether has been minting billions of dollars lately in the past few months, right? However, it seems like there's a bigger problem for the company. According to reports, Binance and Circle announced a new partnership to use USDC to take Tether's market share. So they're basically working on replacing, like swapping it now, having USDC to take over Tether's market share. Circle's USDC token is jointly owned by Coinbase, like we said, marking an alliance between two major exchanges with a long-standing rivalry. So far, Coinbase has always been a rival for Binance. And now these two coming together, working together, using one specific stablecoin, this is something that is major right now. So Binance has undergone a deep transformation in its business, and over time, they mutually agreed that it's made sense to pair one of the world's most trusted and regulated stablecoin, right, and use it amongst each other. So this is all nice, and this is all great. And what's the takeaway for this? In summary, the takeaway is that these institutions identify a major challenge in the industry, and that is liquidations. How do you solve liquidations? You need a collateral. And how does that collateral supposed to be? It's supposed to be extremely liquid. And if you have a liquid collateral, it will also be the most traded collateral. And it also has to be deflationary, at least, if not scarce. Because if your collateral is inflationary and illiquid, it will cause volatility and fluctuations, and this will get you to be liquidated. So it needs to be liquid and it needs to be deflationary, at least, if not scarce. And also, that's not enough. It needs to give you incentives. It needs to give you incentives, right? And this is exactly what, like we said here, sets the BIDL, distinguishes BIDL from other stablecoins. It's offering incentive to its holders in form of USDC distributions. So it's liquid, it's deflationary, it's giving you incentives, and it's using its volume efficiently. It's addressing those four challenges, and it's being used, or rather it's going to be used as collateral in the two largest markets in the world, the derivatives market, the largest, the quadrillion-dollar market, and the bond market right now. And they'll be backed by the bonds, by US debt, which will surpass nations like we saw in this chart right here. So how does all this relate to us? We identified that the issue here, the challenge in the industry is that we don't have a solid based collateral, because keep in mind, this is just for institutions. Remember, this is not for retailers. This is for institutions, and it's for the derivatives market. And it's a new form of collateral, but it's for institutions. If you want BIDL, it's for institutions only, for qualified institutions. What about retailers? Do we have anything similar for retailers? Is there anything that is a collateral that retains liquidity, that is deflationary at least, if not scarce, and that gives you incentives by using its volume efficiently? Is there anything like that, but for retailers? And the answer obviously is yes, right? The answer is yes. And this is where now we can zoom in and come to our ecosystem and tell you that all you need to participate is in this network effect is your decentralized wallet. That's it. And the challenges that we've been discussing about for over 2 years now, and that's the whole idea, that's the reason why we even developed this platform for the community, is to address these major challenges. And it's just so beautiful to see that large institutions, market leaders, are solving these challenges, where we had a 16 years head start, right? Even though the founder of Bitcoin left 14 years ago, we still had 16 years time to solve all these challenges. But now BlackRock has to come and provide collateral that is liquid, that retains liquidity, that is deflationary, that gives out incentives in form of USDC distributions, and that is using its volume efficiently. And it's only for institutions though. Now, this is what our ecosystem is addressing. We are addressing the 4 challenges in the industry. We are addressing lack of liquidity. Why is liquidity so important? It's like we said here, it's because the sharp prices, right? The swings is because of this, liquidations. If you have an illiquid market, you get liquidated. If you have a weak collateral, you get liquidated. And you need a collateral that is retaining liquidity consistently, that is liquid. You need a collateral that is scarce. You need a collateral that gives you incentives for securing the network. And you need a collateral that literally uses the volume efficiently. How is it using the volume efficiently? Because it creates a network effect that the more volume the more liquidity you have, you retain, the more volume you have. And if you use your volume efficiently, that means with every trade, more liquidity you're retaining. With every trade, the scarcer you become. With every trade, the more USDC you accumulate. So you're automatically efficient and sustainable as well. And this is the type of collateral that is needed, not on an institutional level alone, but most importantly, it's needed on the retail front as well. So this is what we've been talking about since the launch of this ecosystem. And it's beautiful to see that everything is falling right into line, like we see it right in front of us, that we need to understand that you are in the liquidity business. Liquidity is key. It brings stability and all of that. And if you have a solid collateral, because we need collateral that is solid, that is liquid, that gives you incentive, and that uses volume efficiently to avoid all of this that is happening. So as a community and in DeFi space, this is open for everyone. no matter of your geographic region, to participate in. However, the bid is just strictly for institutions, qualified institutions, right? And this is something that we need to pay attention to. And if you ask yourself, what are you solving? What are you in the industry to solve? And before you can answer that, you first have to be aware enough, informed enough to understand and to highlight and identify the four challenges in the industry. And once you can address these four challenges, community or your ecosystem can address these four challenges. This is how the community is being empowered. Because now we as a community and a global network, using the network effect of this blockchain technology, we are all working towards building a collateral that is liquid, that is scarce, that issues USDC distributions as incentives and does that efficiently and sustainably because it's using its volume efficiently. Why is collateral important? Because this is the number one challenge right now that we see in the industry. Billions of dollars are being liquidated. 500,000 traders just lost billions of dollars within the last 24 hours. Why? Because the current collateral are illiquid, right? They're very illiquid and very volatile due to that. So if you're building an ecosystem, ensure that you always retain liquidity. Ensure that you have scarcity, at least deflationary. Ensure that you are incentivizing those who are staking, putting their assets at stake by securing your network. You have to incentivize them and in a sustainable manner and use your volume efficiently. This is exactly what we're solving. And it's shown on a much larger scale by this BIDL token that is paired with USDC and that is being used, or the aim is to be used as collateral so that this challenge is being addressed. And it's a shame that it takes a traditional institution to solve this challenge within 12 months. And we in the crypto industry in DeFi, we've been around for 16 years, and even the largest cryptocurrency can't figure out how to do that. They can't do it. It takes BIDL to do it, right? So this is the challenge that is being addressed by our ecosystem community. And the only reason we're mentioning these is because, at least to point something out, we as humans, if we have a point of reference, if we have an example, it's so much easier to make a point, right? It's so much easier to make a point. We've been discussing this. We've been anticipating this to happen, that eventually these large institutions will be used, this BIDL will be used as collateral, and it will be, since it's paired with USDC, and they'll be forced to purchase a bunch of US debt. This is great for us, for the economy wise, because now US doesn't have to rely on nations anymore, but with the regulations they will have now, with the support of even Binance, that partnered now with Circle, and Binance is the largest derivatives trader, and they are literally taking out Tether, because Tether is being delisted from Coinbase, right, in Europe, because lack of regulation and compliance. And this is why, step by step, with more clarity, with more regulation, individuals will focus more on DeFi. They'll focus more on sustainability, on efficiency. They'll ask themselves, which DeFi platform will come up with the same concept like this? Which platform in DeFi is going to address this? And we've addressed this 2 years ago, since the launch, right? You address something because you're focusing on the fundamentals. To have a solid collateral, retain liquidity so that you avoid, or you soften volatility. Make sure that your collateral is scarce, not just at least deflationary. Tick. Make sure that you have incentives for those who are bringing the stability and securing the network by staking. Tick. Use your volume efficiently to keep all of this efficient and sustainable. That's what we are addressing, community, on a DeFi level. And this is what, on an institutional level, BlackRock is doing in less than 12 months, right? While DeFi space, crypto space are busy pumping meme coins, financial institutions are coming to solve real world challenges. They're partnering together to solve challenges, right? And this is what we need to do as a community. We need to understand, embrace, like the title said, embrace and thrive on changes. We can't just keep doing the same things over and over again. We need to identify challenges. We need to add value by using this technology to its fullest. And the only way to do that is to even understand and identify that these challenges even exist, right? And the reason why BUIDL token was formed is because they identified that there is a lack of liquidity. There's a lack of liquidity in this space, and there is a challenge here, and that challenge is liquidations are happening. This is why they came up and said we need to bring this up, and we need to create a collateral that is liquid, that is paired with USDC, that is incentivizing others with USDC stablecoin as well, and that is using the volume efficiently. Solve the 4 challenges. Boom. Amazing, right? And this is exactly, but this is just for institutions. This fund targets institution, and you have to have at least 5 million minimum to invest. So it's not for the retailers. So yes, they're solving this challenge, but not for you. They're solving this challenge for the institutions. So this is why we keep laying out and screaming out of the mountaintop and saying, hey, as crypto enthusiasts, we need to solve these challenges. We need to tackle these challenges, and we need to do this for the retailers, for the community. So this is it for today, community. That's the takeaway today, is that we have a challenge in the space, and that's collateral. We have a lot of liquidations because there's lack of liquidity, there's too much inflation, and there's not enough incentives or sustainable incentives for the community. And it's not done in an efficient and sustainable manner because they're not using the volume efficiently. Our ecosystem does that in spades, and it's been doing that for the last 2 years. So community, this is it for today. I hope the message really came across well. Bear with me as I'm about to reshare the screen again so we can come to your comments. Glad that you stuck with it, and I hope that it made sense. As we now understand that challenges need to be addressed in the space, look for them and then address them. And whoever can address challenges will really be the market leaders. And it's just so beautiful to see that what we've been discussing for the longest is being addressed right in front of us. Being addressed right in front of us. So with that said, let me start with your comments, community. And as we do so, for those who have not yet, let's engage with the tweets community. Let's engage with them as they bring a lot of awareness on our ecosystem. And we can also bring awareness of our industry as well. So as we are going through the comments, those who have not yet, let's engage with the tweets. So Queen Ndumi says, looking forward to another knowledge-packed session. I hope that your needs were met, Queen Ndumi, and nice to see you in the community as well. Queen Val says, hello family, happy to be here. Happy Thursday to Mr. Steve. And our Queen Mother, can't wait to hear from our teacher. Thank you very much, Queen Val. You're very much appreciated. Happy Thursday to you as well. Thank you also for the links, community. Here's the link for Bullrun. Here's the link for Killer Whale and Survivor for the Telegram groups. So feel free to join if you're not part of the network yet. Feel free to join the community. We would be pleased to have you with us in our community. Queen Patricia says, good evening, family. We are here again to hear the best, our developer, Steve. Thank you again, Steve, for your commitment with deeply researched information. Stay protected and blessed always. Thank you so much, Queen Patricia. You're very, very much appreciated. Thank you for your commitment, your consistency, and your leadership. is very much appreciated. Hello, everyone. Can't wait to hear Steve's voice and wonderful teachings. We are so blessed to have you here. Long live to you. Long life to you. Thank you so much, Queen. May you also be blessed, you and yours. We are happy having you in our community. Thank you for your efforts, your commitment, your consistency. Queen Debbie says, greetings to you, community. Greetings, my brother Steve and Queen Mother Wino. I am super excited for yet another session with our greatest teacher, Brother Steve. Thank you so much, Queen Debbie. You are very much appreciated. We appreciate your leadership, your consistency, and your positive aura that is very contagious. Queen Lady Amangere says, good evening, family. I am thrilled to be here again, waiting to hear his wonderful prediction again. Thank you so much, Queen Amangere. We are very pleased to have you here with us as usual. You're very much appreciated. Queen Cynthia says, greetings, Bullrun community. Yet another beautiful Thursday, an opportunity to be inspired, educated, and empowered with the most up-to-date knowledge on blockchain technologies. Thank you, Steve. Thank you too, Queen Cynthia. You're very much appreciated. Always a pleasure seeing you in the community. Queen Cozy says, greetings, Bullrun family. Greetings to Mama Wino and our best developer, Brother Steve. Looking forward to an educational and inspirational session. Thank you so much, Queen Cozy. It's a pleasure seeing you in the community. We are very, very humbled, very pleased to have you here with us today. My brother Theo, great brother Theo says, greetings, my great brother Steve. Dearest Queen Mama Wino and my epic BRL family. As our great professor has stated many times, the only constant in life is change. This session is fire. Let's go. Beautifully said, my great brother Theo. It is. We have to embrace change. To thrive, we need to embrace it. We need to make the best out of this technology. The technology is here, and the opportunities are here. The challenges are identified. The solutions are already engraved in smart contracts and deployed on the blockchain. So we have everything lined up for us. What we've been discussing and preaching for the longest is how BlackRock is in the business of liquidity, right? Then the liquidity business, because they understand that without liquidity, there's nothing you can do at all, right? And you need liquidity for stability, and also you need to have a solid collateral. And this is exactly what they went ahead and did by first starting with liquidity. So well said, brother Theo. Queen Aloshi says, hello, Bullrun family. What a captivating topic. Let's sit back and wait for our able driver, brother Steve, to take us through. I'm very proud member of this family. No fear because I am well informed. Beautifully said, Queen Aloshi. You're also very much appreciated. Thank you for your inputs, your feedback, and for participating, being so consistent. My great brother Abdullahi says, hi everyone. I guess today's topic is all about resilience, adaptability, and growth. Embrace and thrive on change. I'm looking forward to a thought-provoking discussion. Let's make it happen. Beautifully said and beautifully put, Brother Abdullahi. You're very much appreciated for your leadership, for your consistency, your commitment. Your positive energy is contagious. Thank you so much for all that you do on the various platforms, encouraging the community, leading by example. Very much appreciated. And this is my great brother Van. My great brother Van, we go way back from the last bull cycle. It's a pleasure seeing you too. Man, good to hear you again. Good to hear from you too, brother Van. It's been a while, and here we are at the edge of another bull cycle. How time flies. It's a pleasure. Thanks for the super chat. Very much appreciated. Good to see you in the chat as well, brother Van. Queen Marilyn says, another great session with Steve, our great educator. Thank you so much, Queen Marilyn. It's a pleasure having you in the community as well. You're very much appreciated. Queen Tsupe says, good evening, community. Listening to Mr. Steve for attentively for free informative session. Glad that you were able to make it to today's event. We are always looking forward to see you in the community. Queen Mona Metsi says, good evening, Bullrun family and our developers. Yet another session where we are educated, informed, and empowered. Thank you for taking your time and being part of this session today. Very, very much appreciated, Queen Mona Metsi. Queen Mother herself says, greetings to the amazing queens and kings. There is no power for change greater than a community discovering what it cares about. This is so beautifully put. This is so beautifully said. And this is something that we should live by. We have to first understand, right? We first have to understand and discover what we care about, and so that we can embrace the change, so we can embrace the technology. There's so many things going for us. And as we progress through life in general, but even in the crypto space, there will be swings, right? That's just how the markets are. One day we're up 50%, next day we're down 2%, or whatever the case may be. It's always ups and downs, going through valleys, going through challenges, and that's just part of it. And even as we go through these challenges, we're taking one step at a time, knowing that everything is lining up for our good and that things are happening accordingly. And that finally, like we've been discussing in this community, is that once BlackRock gets into the derivatives market, once USDC starts accumulating alongside BIDL, all this US debt, it will give Treasury, and Treasury already acknowledged Bitcoin as a store of values, just digital gold, right? But it's the stable coins that really are partially solving the majority solving the debt crisis for the US. So as US Treasury, US bonds are being purchased by BIDL, by other stablecoin providers, by USDC right now, that is greatly positioned with Binance right now, literally about to take market share from a USDT. USDT starting tomorrow, they're going to be delisted from Europe because they don't have the MiCA license. Once regulations are sorted in the US, they'll also be required to be delisted from the US, the largest market in the space. They'll be forced to be delisted from the US as well if they don't acquire the US license from the US, just like they were delisted because they didn't acquire license from MiCA from Europe. And this will just give USDC a bigger and bigger bite at the market cap, right? And as BIDL grows, so will USDC as well, side by side, because BIDL is paired with USDC. This is great for us. And this just means there'll be more and more liquidity printed by the Treasury Department. We already had that by next week, Wednesday, December 18th, the Feds are getting ready to hopefully cut interest rates again. We are on par. We are right side by side, like on schedule of everything. So everything is lining up for us, community. And with much liquidity, this will, on Ethereum, this will lift us all up. And let's be patient and continue this path as we progress. Queen Madawin also says success only takes shape with passion, perseverance, and consistency. This is so powerful. That's exactly what success is all about. You can't have success without passion. You can't have success without perseverance and consistency. This is exactly what it's all about. I admire your perseverance and consistency, family. Thanks, Steve, for your passion and commitment and educating us. Thank you so much, Queen Mother. Thank you for your kind words. You're very much appreciated. And I can only give it back to you as well. You're leading by example, your consistency on a daily basis, and your commitment to the community. It's I put it in high regards. And we appreciate you very, very much as well. And I believe I can speak on behalf of the entire community. Thank you for all that you put also to work as well. Queen Louisa says, greetings to you, Bullrun community, Mama Winner and Brother Steve. I am inspired all the time. Thank you, Brother Steve, for your continued knowledge and inspiration. Thank you too, Queen Louisa. It's a pleasure having you in our community. You're very much appreciated. Queen Lapi says, greetings, Bullrun family. Another exciting session from our visionary who always foresees what is coming. Take us on our great teacher. Thank you so much, Queen Lati. You're very much appreciated as well. Thank you for your leadership, your guidance, your commitment to the community. You're very much appreciated. Great Uncle George, always a pleasure seeing you, Uncle. Hi, Steve. This topic is spot on. Collateral is a big issue in the crypto industry. Very, very true. That's a challenge in this industry. So, solutions to this is a welcome move. But as Bullrun community, we need to do our part to kickstart our own Bullrun. Absolutely, absolutely. Like we said at the very beginning, the network effect is triggered by the community, and this is what nothing comes anywhere close to Bitcoin. If it comes to the network effect, if it comes to the community, that's something we can aspire to be. Regardless of the Satoshi Nakamoto's been gone for 14 years, but nonetheless, the community is the engine behind it. They don't even care about the founder. They don't even worry about him or her or them, right? They're just continuously carrying the torch. So well said, Uncle George. You're right on point. You're right on point with this. Queen Mother Caroline says, "Great session. We are educated, informed, and empowered. The best is yet to come." Thank you so much, Queen Mother Caroline. You're very much appreciated as well. It's always a pleasure seeing you in the community. Thank you for your feedback, your encouragement, your consistency as well. You're very much appreciated, Queen Mother Caroline. My brother Peter says, greetings to everyone in the Bullrun community. I will have to rewatch this recording to understand collateral and crypto market. Thank you, Steve, for these great insights. Thank you too, my brother Peter. And please do so. And if you have any questions on Saturday, we have Telegram on Saturday. So come with the questions if you need more clarity. It's a very, very important session. It's a good topic that if you have any questions, you need more clarity, Saturday on Telegram, feel free to ask the questions. Queen Grace says, greetings to BRL family, a powerful topic. Major players coming together to get liquidity solutions. USDC is gaining popularity with a plus to which is a plus to our ecosystem. Thanks for speaking from the future. Thank you so much, Queen Grace. You're very much appreciated. Thank you for your kind and encouraging words. And very well said. Very, very well said. Institutions are coming together because they understand that this game is called liquidity. Whoever has liquidity controls the market. If you have liquidity, you address major challenges such as volatility. And also, you are addressing the challenge of collateral. A collateral needs major futures, right? You need to have liquidity. You have to be liquid. You have to be scarce. You can't be inflationary as a collateral. It's a no-go. You have to be at least deflationary, if not scarce, as a collateral. And you have to be liquid. And you have to give incentives as well. In our case, USDC distributions. And then do that efficiently and sustainably. So well said, Queen Grace. Thank you for your input. My great brother Theo says, absolutely fantastic session, great one. Thank you as always for continuing to educate, inspire, empower us all. You are very much appreciated. Thanks again for everything. Thank you too for your feedback, your kind words, your encouragement. Very much appreciated, great brother Theo. I hope you and yours are doing fantastic. Always a pleasure seeing you in the community. And Queen Gladys says, hi, King Steve. Thanks a lot for that wonderful session and your commitment. We are proud to have you. God bless for that love. Thank you so much, Queen Gladys. Your kind words and encouraging words are very uplifting. You are also very much appreciated by the community and by us, by me as well. And we appreciate you very, very much. We're always glad to see you. Your leadership, your commitment, your guidance is very much appreciated. This is a high note to end this with, community. I appreciate your feedbacks. I appreciate your inputs that you put in, and I'm looking forward, brother Peter, if you have any questions, feel free to be part of Saturday. If you can make it, we'll be happy to discuss and bring more highlight in regards to collateral and within the crypto market. So with that said, community, this is it for today's session. Thank you once more for everyone that took their time to participate in today's event. These sessions play a major role in our ecosystem. It means a lot to us as we can not just engage and build on growing this global decentralized network, but it also serves for us to bring awareness to the crypto industry, and also brings awareness to our ecosystem as a whole, how we can demonstrate how we are addressing these challenges, and how we're adding value to this by using this blockchain technology to its fullest, and how it was designed to be used in the first place: decentralized, efficient, and putting the community's best interests at heart. With that said, community, I want to thank you all for participating. I want to wish you all a wonderful rest of your week, and looking forward for us to have another session as we on Saturday. If you have any questions, more feedbacks, keep them for Saturday, bring them on Saturday. Looking forward to a dialogue with all of you, community. You are all very, very much appreciated. Where we are today is because of our collective effort. Our ambition is always to was to create or develop a platform that is addressing challenges, that is adding value to the community, and to create or develop a platform that is addressing not just the challenges, but is also empowering everyone. And how is that possible? Is by addressing these challenges and by informing, educating the community on a regular basis. And is also on building and working on this global decentralized community and network effect that we're working on. And the beautiful thing about this ecosystem and our community is we always strive to work with each other, to empower each other as a collective. We want to win together, right? Without stepping on each other's toes, each other's necks, stabbing each other for selfish reasons. But we want to work as a collective. We want to work as a unit, as a community. We as humans, it's in human nature to be community driven, right? We work together to succeed together with no malicious or selfish intentions in mind, right? However, that's in our community. That's the ideals that we'd like to have. However, humans are humans, and everybody has their own choices, and they make those decisions by themselves, and we have to accept it and live by it. With that said, community, you are all very much appreciated. Have a wonderful rest of your week. Till we meet again. Bye bye, community.